Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, senior Hamas leader killed in Beirut blast, as well as that Wall Street New Year hangover sends big tech stocks lower. We've got lots to talk about in the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is Israel and Hamas. Now, Israel yesterday struck one of the Palestinian militant group's offices in Beirut. This achieved the goal of killing a senior Hamas leader, as reported by Hezbollah. Now, this is a very significant escalation in the conflict that we've been covering greatly, that being the one between Israel and Hamas, which are based out of the Gaza Strip. Now, we've been covering this extensively, of course, since the October the 7th massacre, when largely this, this new conflict did kind of begin. And, we've seen numerous parties, numerous nations kind of hint at joining in. Only yesterday, we were talking about how, the Houthis, that Shia militia group funded by Iran in Yemen, were attacking these commercial vessels sailing through the Red Sea. The US and UK had already placed warships in the Red Sea to defend convoys. However, now it looks like the UK and US may be taking direct action against the group in Yemen. And this would be a significant escalation, as of course it would draw in more kind of nations, more actors into the conflict at hand, which is expanding as we speak almost, and especially with this new escalation of killing the senior Hamas leader in Lebanon, this being a nation which obviously houses Hezbollah, which has been attacking Israel, since October the 7th, along with Hamas, not quite at the extent of Hamas, but these skirmishes between the IDF and Hezbollah have been taking place on the Lebanon-Israel border. But now we're seeing Israel strike that senior Hamas leader based in the capital city of Beirut. We now do have this risk of escalation into a regional conflict greater than ever. And of course, if escalation does take place, it's likely that we will see great ramifications on the civilians in these areas, as well as many more parties also being drawn in. And we've been constantly kind of talking about whether Hezbollah will get involved. At the start of the conflict, we did kind of expect Hezbollah to get involved, most certainly. As the conflict's drawn on, Hezbollah hasn't joined to the extent that we kind of expected, that being a possible invasion into Israel. But we know that Israel's rhetoric has been very anti-Hezbollah, no surprise. But ultimately, Israel has said that they can't have Hezbollah basically on their border, as ultimately Hezbollah, since the October the 7th massacre, has been, attacking IDF troops and border posts on the border. And therefore, it's been referenced before, and we've commented on before, whether Israel would invade Lebanon. Ultimately, though, because Israel is already in Gaza, it's unlikely that's going to be the case. And with Hezbollah's rhetoric, we could very well see Hezbollah invade. But this is the key escalation, which could finally see Hezbollah invade, or even pull in, other actors which fear the same kind of airstrikes on their capitals, even if it's targeting senior Hamas leaders. Certain Arab nations such as Syria, such as certain groups in Iraq, of course Qatar housing Hamas leadership, we could see these other parties now get involved, and that's why it's so important to kind of stay on top of this. Now, Hamas in return accused Israel of cowardly assassinations against its leaders. Now the strike hit Hamas's offices in southern Beirut, killing 6 and wounding 12 more. So, a very significant strike, and taking out that senior Hamas leader, with the Lebanese Prime Minister condemning the strike and calling it a new Israeli crime. Now, we know that Lebanon, due to the fact that it does house Hezbollah, does have this quite anti-Israel perspective, and previously they have gone to war, at least Hezbollah has gone to war with Israel previously invading Lebanon, southern Lebanon, in a fight and an attempt to eradicate Hezbollah from that territory. Now, This is the first targeted attack against Hamas outside of Israel since the October the 7th massacre. And that is very significant, of course, because although we have seen, Israel strike Syrian airfields and, other sort of targets outside of Israel, we haven't actually seen this specific targeting of Hamas outside of Israel. And due to the fact that Lebanon and Qatar do house, Hamas to some extent, it's no surprise that we're now seeing these attacks or at least assassinations take place by the IDF. But what's very interesting though is whether this will draw in those, nations which house Hamas, as Lebanon does have Hezbollah. Hezbollah has a strong alliance with Hamas. And now, they kind of have even more kind of motivation, it seems, for their policies in relation to whether they might invade. And this would be a serious kind of misstep by Israel, of course, as now they're kind of putting themselves on another front when they're already fighting in Gaza. So it does seem that, this could either really work out for Israel and, help disrupt that Hamas leadership which they're trying to eradicate in Gaza, or it could quite seriously backfire on them if this motivates Hezbollah further to invade Israel. So this is something that's very important to note, of course. Now, this attack also stands out in that it dramatically heightens tensions across the Middle East, with there now being a greater risk of escalation between Hezbollah and Israel. This is as a result, of Hezbollah's close alliance with Hamas and their power in Beirut. Now, since the October the 7th massacre, Netanyahu has vowed to destroy Hamas and remove it from Gaza, with Israel launching an air and land campaign on Gaza, killing over 20,000 civilians and troops, apparently. Now, this is obviously one of those figures which is hard to kind of verify and kind of understand, largely as a result of this kind of figure coming from the Hamas kind of health ministry, as well as the point of that being that figures may be kind of hard to grasp due to rubble and lack of control over some areas. There may be some grey zone within these territories, and therefore it's hard to verify the actual number of civilian or troop casualties. So that's important to note as well, with the IDF also making clear its goal to capture or kill Hamas leadership in Gaza. Israel, however, has been negotiating with exiled leadership in Qatar for hostages. Of course, we've been covering that. A truce was established but then did collapse, and the US and Egypt were attempting to achieve a long-term truce, but this process is now likely out the window following the assassination in Beirut. Now, Hezbollah has previously promised action if Israel attacked Hamas leadership in Lebanon. So that's the key thing to note. Keep your eyes on this as escalations, are on the brim, and tensions are very high. So listen out and look out for this. That's all to talk about in this article. Next article to talk about, of course, is Wall Street. Now, yesterday, tech stocks experienced their worst day in more than 2 months, and this comes following the end of the year rally, with 2024 seeing investors now more cautious. Now, we have been obviously covering the US stock market greatly, covering it continually, and ultimately we did note how US indices were on the strong upswing ending off last year, and this was largely as a result of that more dovish rhetoric from the Fed, where we did hear kind of references to cutting rates earlier than previously expected. This created that kind of perspective by investors that the Fed was soon to cut rates, and this would allow the stock market and businesses to once again grow to pre-COVID, post-COVID, levels where obviously we did have those low interest rates. So this is a key kind of thing to note, is how investors going into this year though may be more cautious, as yesterday we did see that more cautious kind of policy being implemented by investors. Obviously we have previously talked about, or at least yesterday we talked about, kind of the issues with certain tech stocks, especially those being Apple, especially and their issues at the moment with legal issues, and that's a key issue for Apple. And other kind of politics related issues are also affecting other companies, as we do know geopolitical issues aren't helping matters, with the Nasdaq ending off down 1.4% and S&P down 0.7%, which is its worst in a fortnight. Now, the decline largely fell on chip makers and Apple, which dragged the indexes lower. And this is what we're talking about with Apple. We did talk about yesterday how this was likely going to affect Apple, just out of fact of the legal issues that are currently facing it. Those legal issues do compound into something a lot larger, and investors are always wary of that. We know that these legal issues could challenge a great deal of sales that Apple makes through its services arm, and therefore this is a key thing to keep your eyes on. Is this issue with both their App Store, their Apple Watch, and other kind of areas? We know that they've also kind of got that kind of deal set up with Google, where Google's pre-installed as the default browser on Apple phones, but this is now going through a kind of antitrust kind of court case at the moment to decide whether this is kind of monopolizing the market and therefore needs to be separated. So keep your eyes on these kind of topics and legal issues which are facing Apple, as these are what affecting the S&P 500, for example, yesterday, and likely going into the rest of this month. Now, Apple lost 3.8% also after Barclays analysts gave it a sell rating, which is its first time in 2 years, which Barclays did give that kind of label to Apple stock. The strength of the gains seen by the S&P 500 in December also gave investors caution going into 2024. Obviously, investors may be wary of that strength and be maybe expecting a pullback going into the new year, which is what we're now seeing, with some investors even selling off as a result of the worldwide instability and tensions such as an earthquake in Japan, and also tensions rising in the Middle East, driving oil prices higher. So that's important to note most definitely. Investors are expecting US data this week as well, including FOMC minutes, which we're getting today, and NFP figures, which are coming out this Friday. So two key pieces of data which are already affecting markets. Now, Microsoft, Meta, Amazon, Alphabet, and Nvidia were all negative alongside Apple, with the tech sector also facing potential problems in selling into China after US authorities put pressure on ASML to halt exports to China before planned US bans were to come into effect. So, key issues are facing the tech sector at the moment, and going into this new year, we have seen a significant sell-off. That said, with the more dovish rhetoric that we have heard from the Fed, it may be that macro kind of economics is going to keep pushing big tech higher, despite the legal challenges that are facing Apple, despite the political challenges which are facing big tech and US companies as a whole. Ultimately, it will be a challenge between macro and kind of these fundamentals, which are going head to head at the moment to decide big tech stock prices. That's all to talk about in these articles, though. Next to talk about, of course, is the charts, where we do have quite a bit that's happened yesterday, as we do enter the new year. Now, the first place to start off is US indices, but on the S&P 500, unlike the Dow Jones that we usually start on. This is largely as a result of the last article that we just talked about, where we did talk about that significant sell-off that we did experience yesterday, and that was a very significant sell-off indeed. So we did end off last year at those very significant highs, never seen before. However, going into this year, we have now seen a significant sell-off, and I've just brought up the daily here to show the kind of perspective that we're seeing. So, as we have here, this is the daily candle that represents yesterday, and you can just see that significant sell-off that did take place as a result of those the Apple decline, as well as the chip makers decline, but also those other stocks that were mentioned. And this is very significant, as this single candle kind of took back, numerous days of gains, that would previously been seen. And the issue is, and the worry for investors going into today will be if we do see this continuation of this bearish reversal. Ultimately, though, as I've already previously mentioned, macroeconomics and the macro perspective may come in handy for those more bullish investors, as we do get the FOMC minutes today. So that's something to note most definitely. If we bring that down onto the 4 hour, price is sitting around this key liquidity level, as mentioned here. So, quite possibly price will use this key area, as we're already seeing with that bullish hammer, and quite possibly, will continue to the upside. So definitely keep your eyes on this. But what's interesting to note is this big sell-off also followed this very key bearish divergence that had formed on the chart. So, these bearish divergences are on the RSI are always important to keep your eyes on, and it's very interesting to now see that price is oversold. So keep your eyes on the S&P 500, especially going into today, which is this stock, but ultimately we're looking at the US 100 right now, as this is the stock which did see the greatest sell-off yesterday. But yeah, keep your eyes on these stocks. Next asset to talk about though is the dollar, which did shoot higher yesterday as markets opened for the first time since the new year. So markets did see the dollar push so far to the upside that we're now sitting around that 78.60 level. Previously, we were talking about price it maybe being around the 50%, maybe around the 61.80, but no, price has pushed all the way up and until that 78.60 level. So a significant push to the upside indeed. The question is though whether this bullish momentum will hold, or in fact we'll now see a continuation to the downside. This great volatility that we are seeing at the moment does make it kind of very hard, but also quite interesting to kind of decipher and understand. We are nearing these recent highs, higher lows, sorry, lower highs, sorry. So it will be interesting to see whether, if we don't reverse from this 78.60, whether we do continue and break above those levels, as we do know that those lower highs were made by this key liquidity and resistance level. So keep your eyes on the dollar. Next to talk about is Euro USD, which, as mirroring the dollar, is sitting around that 78.60 level at the moment. Very key level indeed, because it does line up with that recent level of liquidity and accumulation, where we have previously seen price move away from in a very bullish manner. We have moved in a very significant bearish manner to this level. So, it'll be interesting to see how price does react and whether it does now take a significant move to the upside. So keep your eyes on that. Next to talk about though is pound yen, which is nearing the floor of the recent kind of range that pound yen has moved around in. It's kind of like in a consolidate, like moving to the downside in a consolidation kind of manner. It's kind of hard to explain what I mean, but ultimately we're kind of moving quite slowly, not too much momentum, which is in stark contrast to the recent volatility that we had seen as a result of kind of the Bank of Japan's comments most recently on raising or decreasing interest rates. But ultimately we are nearing that lower level of liquidity, so it'd be interesting to see how pound yen does react to that level. Very important to note though is Bitcoin, which saw a great deal of volatility yesterday and going into today. Now it did make that very bullish move to the upside, breaking above those recent highs, which had formed the top of the range that price was moving in. And now we are nearing a retracement and a kind of retest of that kind of top of the range. Maybe we've already tapped it, but it'll be interesting to see how price does react with these levels. If we do draw out a Fibonacci retracement tool just here to kind of get a better perspective on these key levels which price may be interacting with, we're still sitting quite far away from that 38.20. If we do come into contact with that, it will be coming once again into contact with the key resistance level, which is now acting as support. So it'd be interesting to see where the price does move away from that in a very bullish manner. One of the last assets to talk about, though, of course, is gold. Not too much to say at the moment, but we are still kind of consolidating, kind of moving to the downside. It will be interesting to see whether we can hit that 38.20. And finally, to talk about on the charts is Brent crude oil, which did break below that key liquidity zone that we were talking about yesterday and is now on the move to the downside. It'll be interesting to see where we might stop off on oil before we reach the very bottom of the market. That's all to talk about on the charts, though. Lastly, to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now, firstly, we will be getting Spanish unemployment figures, so that's interesting to note. As well as that, we're then getting Swiss manufacturing figures, along with German unemployment data, so some key European economic data figures there. As well as that, we're getting US mortgage application data, along with the US manufacturing figure. And finally, and most importantly for the markets, we will be getting FOMC minutes, so that'll be heavily driving any US equities indexes, of course, as well as the dollar. So, lots of data to keep your eyes on. Stay on top of the markets today, and I hope you have a great trading day. But that's all from us at Wildwood Capital. We've covered a lot on the articles, lots on the charts, and lots on the economic calendar. Have a great one. See you later. Bye.